Not all mortgage companies are built the same. And in some ways, that's a good thing. And in some ways, it's a bad thing that can hurt you. In this video, I'm going to go over something to avoid, a red flag that if you see it, you feel it, you hear it, you run for the hills. Stay tuned. All right, Matt, the mortgage guy, residential mortgage broker, powered by You Mortgage, licensed in 48 states. Go to greatmortgagebroker.com to connect with me and my team. In today's video, I want to talk about a topic that came up yesterday at the office. And it's one that I hear from a lot of clients and a lot of loan officers. So as a consumer, as a real estate agent, anybody who's watching this, please beware of this practice that happens within mortgage. And you do not want to be the victim of this practice. Now, to make a long story short and just to get to the point, it's basically shortcutting the pre-approval process. When you're getting pre-approved, what you want, even if you don't know it at the time, is for a lender to be thorough. You want your credit pulled. You want all your documents reviewed. You, in some cases, need a verification of employment that breaks down exactly what you get paid. You might need an underwriter to look at your file and review things. And, you might spend time and effort and energy doing a correct pre-approval. But trust me when I tell you, as somebody who looks at thousands of these things every year, that is what you want to do. The opposite is a lender who takes a couple documents, has a short conversation with you and says, yeah, it should work to about 400,000, or yeah, if we're able to use the income, which I think we can use, which I roughly calculated in my head, yeah, you can do 450,000 with 10% down. That unfortunately happens. And what will eventually happen for that loan officer, for that client, any real estate agents involved, the title company, that deal will fall apart. Everybody will be upset. Everybody will be wondering what happened. 99 times out of 100, if there's problems within a transaction and it's mortgage related, it could have been avoided with more work up front. So if you're talking to a lender's asking for a lot of documents for a pre-approval. Lender thinks it's a good idea to pull your credit and run the automated underwriting system. Lender says, hey, we're going to need another day because we've got to order a verification of employment. We might need, the last pay stub from the last couple of years. We might ask for, supporting documentation, to prove this or that. That is a good thing. Had a great conversation with a client yesterday who was a little upset that it took some work on their part. And I explained two things. One, you're borrowing hundreds of thousands of dollars. And so it should be a little bit harder than purchasing a candy bar at a convenience store. And two, on our side, it costs to pull credit. The people that work on the team, they get paid real money. So the time, effort, resources, and pay that we're spending is not all for naught, not just for fun, right? We're doing it to protect the consumer. You want to be 100% sure you're able to get the financing so that when you submit an offer and you write a 22-day closing and you write that you're going to release your loan contingency in 12 days, that it can happen. The only way to truly do that is not to wing it. It's to have a full-fledged pre-approval by a team that does it and they do it well. So this is my message. Consumers, real estate agents, fellow loan officers, a thorough pre-approval is not just the best way to do it. It's the only way to do it. So hope this helps. Hope that if you were in the process and maybe found somebody who generated something for you after clicking a couple buttons or having a 3-minute conversation, no documents, no application, no credit pull. Hopefully you go back and say, you know what? I really want to be sure that I can submit offers with confidence. And maybe you have to talk to another lender. Maybe that lender goes, oh, you want to get pre-approved. They used to call it pre-quals, where it's just a maybe kind of, I think so. A pre-qual is worth absolutely nothing. If, you ask your mom if you're a good looking boy, she's going to say you're a good looking boy. But I don't know why I use that analogy. That's the dumbest analogy of all time. You want something that means something, right? You want a pre-approval that's been fully vetted by a quality lender who can get you to the finish line. Thanks for watching. Hope this helps. Until next time, we gonna see.